Good morning. Welcome to this webinar, which I've entitled How to Achieve Lifelong Trading Excellence and Profitability. And emphasis there on trading excellence, because the excellence has to come before the profitability. And lifelong. Lifelong means that we are going to change how we invest. And not just for a few times, but forever. Basically, we're going to change who we are when it comes to trading. So one of the emails that you got, and when you went to the registration site, I asked, what is the single cause of investing mistakes that holds all traders back? And you were given a number of choices, if you like. Your analysis, which indicators and techniques you use. A lot of people believe that is it. What the market does, the instruments you trade, many instruments you can trade, leveraged, unleveraged, and or is it how you trade? Is it the economy or the government? Is it the financial data you have access to and when you get it? What time frame you trade in and how much time you spend trading? Or is it political events, politicians, or global disruptions? Now, I'm not going to answer that question right now, but I will in a moment. Before I get into it, I'm going to just quickly go over what I'm going to cover today, what the agenda is, if you like. I'm going to talk about how to become a black belt trader. That is, how to achieve excellence and mastery and put you on a path to getting there. And I'll also talk about the first stage to creating an unshakable belief in your consistency as a trader. Now, that phrase is in inverted commas because it comes from Mark Douglas. I'm quoting Mark Douglas, who wrote Trading in the Zone, and I will refer quite a bit to Mark Douglas today, and I'll also refer to another book and author as well in a moment. I'll also cover and explain how you can do lived experience training, how to get skills, have a plan, get lived experience to gain the skills, and then that skills acquisition, and then comes profit acquisition. And you've got to get it in that order. You'll never just go straight to profits on a consistent basis. And I'm going to talk about the settings behind the SPA3 Investor's unique indicator. Now, I'll explain what SPA3 Investor is in a moment, but it has a number of uses patterns, and it uses a unique indicator. And I'm going to talk about the unique indicator today and just the background, if you like, the settings behind it, behind the scenes. And then I'll also give you a special offer. Now, you know there's a special offer at the moment, but something that you haven't been aware of in what you've seen so far is a new trading system that we're about to release, and you will get some special access to that. So I'm going to cover that, and there'll be obviously the gaps in between. Now, before I get into all of that, I must tell you that everything I cover here today is general investment advice. You're going to see some charts, you're going to see some parameters. This is not personal or specific investment advice. That is a necessary statement we have to make because we have an AFSL license. That's the regulator, ASIC in Australia. Right, I'm just going to go through what I've called the fail-safe path to trading excellence. And I'm going to go through, and you might want to see where you are on this pathway, because we're all at different stages of the journey, and some of us get stuck at a particular place on the journey and don't go any further. We hit a glass ceiling, and we don't know why we get stuck there or what to do about it, because we don't know what we don't know. And this webinar is all about showing you that path so you can understand and see from a bird's eye view what you don't know yet and how you might be able to get there. So where do most people start? They hear about, when they come to the stock market, somebody tells them, it comes from some source, I doubled my money in the stock. And that pricks up your ears because, wow, it's quick profits, and it's a lot of profits too. So we effectively get an interest through somewhere. And we enter into the market trading a particular instrument or instruments, and there's varying amounts of them, and then you kind of hear about you should use this technique, this charting indicator with this special setting, with this look back, with this chart, with that, or this fundamental analysis, and this is the secret to finding stocks that go through the roof, etc., etc. And you get hooked. You want to try, and you're curious, you want to find out where this takes you. And then you get into what I call external noise. You get tips from magazines, from websites, from social media, and maybe you subscribe to a newsletter and you get broker reports, and they talk about all sorts of wonderful ratios and financial this and financial that, and this is the secret to finding out the stocks that are going to win and win big. And of course, social media has played a massive role in that over recent years. And YouTube, there's all the solutions you'll find on YouTube, but you don't get there. Somehow you realize you've got to start learning more about this. You can't just at a surface level take somebody's input and it's all just going to magically work. So you think, well, I'm going to work this out. I'm going to start learning about analysis, whichever analysis it is, whichever indicator it is. And then you realize that somewhere along the line, somebody tells you, read a book or wherever the source is, that you've got to create a trading plan or an investment plan. So you go about doing that and you structure it and you get a template, whatever. And in there you start putting what the how you're going to find the stocks, which stocks you're going to invest in, and so that's the what and when. So then you start saying, well, when am I going to buy? When am I going to sell? Or I'm just going to buy and hold. And of course, a 50% fall happens in the market, and you say, well, I'm not going to buy and hold now. You find out about fees and managed funds and all sorts of things. And then there's ETFs, but you're very subjective. You are getting pulled from pillar to post, and you haven't yet ironed down a rigorous process to answer the questions of what to buy, when to sell, and how much to buy and sell, which is really the only things that you need to have answers to. And then you start at some stage you stop seeking to find the Holy Grail, the analysis Holy Grail, the one that's going to answer all your questions, take away all your emotional pain, take away all the ups and downs, the inconsistencies, is going to take away the discomfort and the disillusionment and the disappointment, and you say, well, no, there is no Holy Grail, so I'm going to start now how to learn how to trade rather than just analyze. And this is a big realization point, and this is where you start researching, creating, finding, or obtaining some objective analysis with an edge. And this is where you find out that you need to have an edge, like a sporting team needs an edge, or a sporting individual needs an edge, or a casino needs an edge, or a business needs an edge. And so when you trade, you need to have an edge. And you can think back to other parts of your life where you have an edge. You have an edge in what your chosen career has been, and that edge you get paid money for. And you might be at some part along, or you might have got right to the top of your chosen pastime that you worked at to gain income, or still do, and that's your edge, right? And I'm going to put a grading system on this now. I'm going to go to the martial arts with karate. Now, I would say that if you're down at the bottom over there in those first two, you're a white belt. You're a white belt, judo, karate, jiu-jitsu, whatever, taekwondo, whatever it is. But you're at the very beginning. You're a white belt, and you can, and the martial arts environment describes the skill level of people that have various belts, and it's all about skills. If you're still using external noise and tips and brokers, and you're getting pulled from pillar to post on somebody's opinions and innuendos and ideas and notions and predictions, well, then you are just a yellow belt. But you're in the game, and you're starting to learn, and you're on the journey, and you're on the path. If you started learning about any kind of analysis, I would say you're starting to get to orange belt, because now you're in the game and you're trying to work it out, and you're working on your skills. When you get to a point where you create a plan but you're still using subjective analysis, you've got to green belt. And if you've now realized that you're never going to find the Holy Grail, it's not about perfection, either at the conscious level or the unconscious level, because you can't achieve it, and you now go, right, I just need to have an edge. I need to have an objective edge that defines and answers the questions of what, when, and how much I invest. So your money management and your risk management, how you do that. So your plan goes to another level, and you realize I've now got to start to trade, because trading, as I'll show you in a moment, is different from analysis. And at this stage, you are a blue belt. So I'm just starting off blue belt. So now you're looking for an objective edge, or you're trying to develop one, or research one, or create one, or obtain one. And then you start now moving down a path of learning to trade rather than only to analyze. And you start to learn about and practice in live trading to completely accept all the risks. And this is the first step to getting to trading mastery, trading excellence, to getting to where I'm going with this, obviously, is a black belt. And you start practicing in live trading to flawlessly execute 100% no wiggle room analysis. Now, those two phrases are in quotes because they come from Mark Douglas. Flawlessly execute a 100% no wiggle room. No wiggle room means objective. So there's no room to move. There's no debate. There's no looking at a signal, if you like. And I'll give Mark Douglas's definitions of what he saw as a trade entry and a trade exit and the definition of those. But you can't change your mind on your analysis because you've heard some noise that's coming from the outside. That's what no wiggle room is. And you'll see that in the definition in a moment. And this is now getting to purple belt. And now you are really on the path to not just being an analyst, but also becoming a trader. And there's a big difference. And then you start to practice in live trading to trust yourself, trust you, to execute. You start trusting your objective analysis. And very importantly, you start trusting the market. And why do you have to trust the market? Because you can't just keep on stopping and choosing when you think the market is going to be the right time to be in it, because that's an opinion and you can't tell the future. And the moment you start predicting and trying to tell the future because you know what's going to happen because some external event or something that's going on or somebody said something and this notion takes over what you think is going to happen, then you're no longer trusting. You're not trusting the market and you're not trusting yourself to be able to execute in that market or be able to execute all your analysis because you don't trust it, because you don't think it's going to make profits in that environment. You know somehow that it's what's going to happen in the future. So you've got to trust. And the next step after trusting, and trusting is a prerequisite to this, is to practice in live trading being confident in all market conditions. Now, confidence doesn't guarantee outcomes, but what it does do is it guarantees that you will execute the way that you're supposed to execute to be able to stay in the flow, to be able to stay in the environment that is an endless stream of opportunities. There's another quote from Mark Douglas, an endless stream of opportunities to profit from. And because you can't make profit if you're sitting on the sidelines watching, being a spectator. And if you lack confidence, that's what you're going to do. You're going to say, this is happening in the world at the moment, therefore I know what's going to happen. Well, quite frankly, you don't know what's going to happen, and you need to surrender to that. And then confidence is a prerequisite to consistency, because consistency, you've got to start practicing it in live trading in all market conditions. And you've got to come up with a way that you can practice this, because you're not going to go and do it with your hundreds of thousands of dollars or even millions of dollars that you have in the market. You're not going to practice with that. There has to be an environment through where you practice to do your skills acquisition, to then be able to go and execute under the pressure of having real money at stake and doing your risk management. This is brown belt level trading, but you're on the path and you're learning and you're practicing and you're getting better and you're acquiring skills until you achieve trading excellence. When these skills that I've listed over here become habits, and habits can only come from practice and doing and lived experience things in the environment in which you want to execute. And by habits, I mean it becomes second nature. Second nature is excellence and mastery. So it becomes a part of who you are. It becomes a part of your trading identity. This is the pathway. Now, you might pick where you are along this pathway, but until you get to that excellence, and this is the great thing about trading, is that everybody can achieve it. And it's not that hard to do, provided you step into a process that can get you there. The great thing about trading is you don't need physical ability. So martial arts, you need physical ability. If you're applying this same pathway to a sport, an individual sport, then you also need physical ability. But with trading, you don't need physical ability. You just need to accept and surrender, get your ego out of the way and surrender to a process, to step into a process that can get you there, and to believe in that process and keep going with it until you do get there. So the problem is that you will experience profit trades at every level of whatever belt you've got, right? And the market will do that to you. All you need to do, you're going to guess lucky sometimes. A tip is going to work. All of those subjective things I showed you on that path, you're not going to have zero wins. You're going to have one or two. And every time you have one, you will convince yourself that you know enough to be a great trader. until the market conditions come around and prevail and you lose money and you go into drawdown. And when that happens, you will blame everything and everybody, and you might have done this before. You'll blame your analysis, your system, your newsletter, your broker, your tips, your friends, your colleagues, whatever it is, right? You'll blame somebody or something. You'll blame the market. You'll blame the financial data, the timeliness or whatever. It's not the right data. It's not the right instruments. You'll blame the economy or the government. All or some of these, you won't necessarily blame all of them, but there might be some of them along the way. But this is what you'll do. You'll get into this blame game, and you will blame wars. You'll blame Trump. You'll blame disasters. It'll be everybody else's fault but yours. And your perceived path to solve the problems will be to do more analysis, to go continue seeking the Holy Grail. You'll look for different indicators. You'll try different settings, and you'll get stuck in this everlasting loop of trying to solve your problems with better analysis. Guess what? You'll never be able to do it, because there's no such thing as perfect analysis. And at some stage, every single analysis will experience market conditions that are going to cause the very things that you haven't accepted, which are the risks of the market. That is why it's a skill to accept the risks, every single risk that the market can throw at you. So that won't solve you. Your system hop, your newsletter hop, your broker hop, your indicator hop, you'll just chop and change and keep going, thinking that this will solve your problems. And of course, you'll stop playing the infinite game of investing until your definition, whatever that is, of when better days will come. And we've seen lots of people pull out of the market, in the last year or so, because they know what was going to happen because of political environment, because of wars. And guess what? We were up nearly 30% in our portfolios over that period. And I'll show you that in a moment. And they're sitting on the sidelines watching this happen because they knew what was going to happen. They could predict into the future based on some variable that came from left side, and therefore they know what's going to happen. All of this is inconsistency. And I'll talk a lot more about that in a moment. But you won't blame your level of trading skills, because you will think that whatever those things are, the better analysis, the system hopping and looking and finding the Holy Grail, stopping and sitting on the sidelines, you'll think that is smart because you know what's going to happen. And why won't you blame? Why do you blame all these things and try and go down paths that won't solve your problem? Because you don't know what you don't know. But you'll truly believe that your chosen path is right. You'll truly believe that finding better indicators or doing better analysis or doing more analysis or system hopping or newsletter hopping or broker hopping or stopping and sitting on the sidelines and taking yourself out of the opportunity flow, you'll believe that that chosen path is right until you don't, because something else will happen that will alert you to it, and you'll find out, and the market will turn and you won't be in it. And you'll find that no matter what indicator you move to, it doesn't solve your problems. And you'll find that another system doesn't solve your problems, because the problems aren't those things. The problems are your level of trading skills. So what is the single cause of investing mistakes that holds back all traders' results? It's how you trade. It's the one and only thing. Out of all of those things, the only single cause of all of your mistakes, all of the things you don't like about trading from time to time, about not achieving your profits, all of that is how you trade. It's got nothing to do with anything else. Sure, they do help, but ultimately you can have the best analysis. The market can be in a great environment. You can be trading instruments that are going gangbusters. The economy can be going great. The government can be fantastic. Your financial data will all be lined up. The political events, the politicians, the global, nothing will be there. And guess what? You still won't achieve what you want to achieve, because you will continue to make mistakes, because the mistakes are not found in there. They're found in how you trade, what skills you have. And over the long term, the conditions are going to come when all of those are going to line up, and and how you trade is going to be even worse. So how do you become a purple to black belt trader? How do you get to that trading excellence? How do you get to creating, to getting the skills, in instilling them as functional habits in your life, overcoming the dysfunctional habits that you have, all the mistakes that you make, and making them second nature and a part of who you are? How do you get to that, to be a purple to black belt trader? Well, I'll take a quote from another environment, which is the martial arts. The formula is fairly simple. if you wish to get a black belt faster, train more and harder. Train more and harder, not trade more and harder, not analyze more and harder. Train more and harder. Mastery is the goal of traditional martial arts. And so it should be, the goal of trading as well, of becoming, no matter what it is that you do. And the thing is that it's a hell of a lot more simple than what most people think. Why? Because they're on the wrong training path. They're on the wrong skills acquisition path. They're trying to acquire the wrong skills. So mastery takes discipline and commitment. The refinement of your techniques and skill should be the goal of your training. So you've got to train to get the skills to get to the ultimate level of black belt. The reward will be a black belt. So your goal is to acquire specific skills and to step into a process to acquire these skills. Now, inverted commas, because they were Mark Douglas's words. He used to talk all the time about stepping into a process, a skills acquisition process. And ultimately, the skill you're looking for, the one before black belt, you'll never get to black belt. You'll never get to trading mastery. You'll never get to trading excellence. You'll never get to consistently and sustainably making profits that are acceptable to you with acceptable drawdowns and acceptable losses until you gain the skill and acquire the skill of consistency. And objectivity is a prerequisite to consistency. So in that path that I had there, you saw where objectivity came in, to have an objective edge, to have an objective decision-making system. You can't become consistent at something that is subjective. Why? Because it's changing all the time. That's the definition of subjectivity. So you can't become consistent at something that's changing all the time. System hopping, newsletter hopping, broker hopping, changing indicators, changing settings, changing timeframes. That are all inconsistent. And so you've got to make all of those things objective. And only then have you got any chance, a snowball's chance of becoming consistent. And objectivity equals no wiggle room trading systems, decision-making systems, when to buy, what to buy, and how much to buy, and how much to sell, when to sell. Those are the decisions that you've got to make. And you've got to have no wiggle room decision-making criteria to do that. And you can build it all into a trading system. So becoming a purple to black belt trader or martial arts is you need an instructor, you need a mentor, and you need a performance coach. You're not going to do this on your own, because you first of all have to define what the training plan is before you can define what a trading plan is. And if you and the two are so entwined that you have to do this. You have to specify how you're going to get the skills. So in the martial arts environment, an instructor provides the techniques. So in the trading world, it's an analysis technique. It's how you decide those things, what to buy, when to buy, and how much to buy. And you need a training plan. You need a curriculum to get there. And you need a facilitator to actually assess the acquisition of the knowledge and skills, the right knowledge and the right skills. So the right knowledge, and I'll refer to Mark Douglas here again, are fundamental, what he calls fundamental truths. And he also calls them, the principles of consistency. So how do you know when you become consistent? Well, there are certain principles that define consistency. And there are fundamental truths of how to execute, how to trade. And those truths and principles are the knowledge that you need. But then you need to go and live execute those truths and principles which define the skills. So knowledge is something you learn, skills is something you train. You got to do it. And that is how you acquire the skills. You can't read about skills and suddenly just have them. You have to step into a process to attain them, to acquire them through lived experience. You also need a mentor. What does a mentor do? A mentor guides, supports, empowers, motivates, inspires individuals based on personal experience. So personal experience of having lived this experience of gaining the skills and acquiring the skills to achieve the excellence, the mastery, the black belt, to get to that level of actually becoming consistently successful in the markets. And you need a performance coach to identify and overcome barriers to peak performance. So what's stopping you? What are the dysfunctional habits? What are the dysfunctional skills you have that keep on getting in the way, that set this glass ceiling that you can't get above? And the performance coach will focus on developing skills, specific skills, through using specific techniques to be able to get those skills. Because These skills you can't just get them by default. You can't just get them by doing trial and error and just keeping on persisting, doing things the wrong way and expect to suddenly, be doing them the right way. You have to start practicing doing things the right way. And you can apply this to other parts of your life as well, whether it be a sport or whether it be business. And you need that outside assistance. You need to have somebody looking from the outside in as to what you're doing, because when you're inside it, you can't see the wood for the trees, and you don't know what you don't know, and you don't know what to do. So it's not just about knowing what to do. You then have to do what you know, and somebody guides you on doing what you know. So at ShareWealth Systems, we have a two-pronged solution. Okay, the two-pronged solution, this is the tangible stuff that gets you into that path and gets you all the way to the top of that path, is firstly objective analysis that has a verified edge. And I'll talk a bit more about that in a moment. And we also have the lived experience training of using that objective analysis, right? And it's a specific type of live trading where you get the instruction, the mentorship, and the performance coaching, the training plan, which then becomes a trading plan. And that's what we take you through. And we provide these two in a very structured and controlled way. And you do, and it's all going according to using the 5 fundamental truths and using the 7 principles of consistency out of Mark Douglas's book, Trading in the Zone. And we do this, the way we deliver this is through what we call Learn to Trade Properly study groups. And in these Learn to Trade Properly study groups, we have a very specific skills acquisition trading plan. And we have a definition of the skills goals that need to be attained, and I've basically gone through them. But we very specifically define what you have to do to achieve those goals, what you have to trade through and come out of to achieve those goals. And we define it very specifically with numbers and everything. And in the study groups, it's not just a one-on-one basis. There is a cohort of people, it's a group, and the whole group executes the skills acquisition trading plan to attain the skills together. So whilst we have an instructor, coach, and a mentor, you are all each other's coaches, mentors, and performance and instructors as well. And so you stick to the plan, so you stick to the process to be able to gain the skills to then, down the track, get the outcomes. So it's skills first, outcomes second. So this is not just a course. It's actually a lived experience on rewiring, redefining, reframing how you trade. And I'll show you a couple of testimonials in a moment. I won't have time to go through all of them, but it truly does transform the whole experience of how you trade. It de-energizes the dysfunctional habits and it energizes new functional habits. Now I'm going to give you a quote. Okay, one of the things that I said I would do, this comes out of chapter 11, page 172 of Mark Douglas's book, Trading in the Zone. Now, I'll just make a comment about trading in the zone here. Most people who trade the markets have already read Trading in the Zone, maybe more than once. I know people that have claimed to have read it 7 times and still didn't get it. And I know why they didn't get it. Mark Douglas was my personal mentor for 11 years. We formed a friendship in 2004, and for the next 11 years, he mentored me one-on-one in various meetings around the world, about hours on the telephone, etc., etc. And so I truly do believe that I know it worked. It worked with me. I know his material works, and I've seen it work with so many other traders. But having read it and being aware of what's in the book doesn't get you there. You've got to take the material in Mark Douglas's book, and you've got to attain what he talks about through lived experience training. And that's very specific training. Acquiring those skills is what we do in our Learn to Trade Properly study groups. So this is a prerequisite. So he's got an exercise on page 189, which mainly forms the basis of our skills acquisition plan, except we've taken it a few steps further and got more specific, and it's also done in a coaching, mentoring, instructional environment. So out of the book, the quote, the first stage is the mechanical stage. Now I said earlier on, I'll tell you what the first stage is, one of the things I wanted to cover. In this stage, you build the self-trust necessary to operate in an unlimited environment, and an uncertain environment, the market, and it's always uncertain. And you got to trust how you can operate in an uncertain environment. So one of the definitions of distrust is FUD, fear, uncertainty, and doubt. So you've got to be able to now trust in a fear, uncertainty, doubt environment. You learn to flawlessly execute a trading system. Flawlessly execute. That doesn't mean you get flawless results. It means that the process that you follow is flawlessly executed. And but you can't flawlessly execute something that's subjective, that's changing all the time, because it only happens once. So sure, you could say, well, there was only one instance of executing that variable, because the next time is going to be different. Therefore, out of a sample of one, I executed it flawlessly once. Well, sorry, that's not consistency. So you can only flawlessly execute something that is well-defined and objective and doesn't change. And you train your mind to think in probabilities, the 5 fundamental truths. So now you go from thinking the way you currently do, which is not in probabilities, and it's very difficult to learn to think in probabilities if you're not in a structured environment getting you and showing you how to do that. And here we are, we create a strong, unshakable belief in your consistency as a trader, which is one of the things I said I would cover. So that comes out of Mark Douglas's book. And this is really, unless you really, really, truly, genuinely believe and understand what that means, you are never going to get the material that's in Mark Douglas's book, Trading in the Zone. It's still #1 in investment books on Amazon, 25 years after it was published, and there's a good reason for that. But people read it, it's popular, but they don't get it. And what we do is we help you to get it. So in the book, he also defines your trade entry. This is your no wiggle room entry. And I'll read, quote, "The variables you use to define your edge have to be absolutely precise, unambiguous, another word. The system has to be designed so it does not require you to make any subjective decisions or judgments about whether your edge is present, who the president of the United States is, whether there's a war on, what the economy is doing, what another indicator is saying. All of that is external to your objective edge, your absolutely precise edge. If the market is aligned in a way that conforms with the rigid variables of your system, then you have a trade. If not, you don't have a trade. It's on, off, it's black, white. There's no subjectivity involved where you can read a commentary from somebody in a newspaper or online and bring in that subjective notion to override it. You can't decide that because the market isn't doing so well in the last 3 weeks that therefore I'm not going to take this trade. If your rules are met to take the trade, you take the trade. And that is the first step. That's objectivity. And it's the first step to getting to being consistent, period. There are no extraneous or random factors. No other extraneous or random factors can enter into the equation. Now, that is, I'm sure you can't say that is a subjective definition of what a trade entry is. That is very precise, and that means a rules-based system. It means a mechanical system. It means a non-discretionary system, whatever you want to call it, and that system has to be evidence-based. The edge that he talks about has to have at least been the trade entry, the definition, whatever criteria you use, has to have either been only back tested on historical data, theoretical data, if you like. Well, it's not theoretical, it's historical data. But even better, it should have also been tested, in a live trading environment with a small amount of capital to see how the research, the non-wiggle room, the edge, the mechanical edge operates in a real live environment. And that's what I'm going to show you in a moment. So we've got both. And of course, the more confidence that you have, or the more trust you have through the evidence of how well this objective analysis is performed in research and in live trading, the easier it is to trust. And whereas if you just bring that system that has no live trading, has only been researched, more difficult to trust. And that's what Mark Douglas defined as no wiggle room. The stop loss exit, or whatever you want to call it, the same conditions apply to getting out of a trade that's not working. Your methodology has to tell you exactly how much you need to risk to find out if the trade is going to work. So that's your money management. and risk management can come into that as well. But it's absolutely precise are the words that he used in the definition for a trade entry. So in our Learn to Trade Properly study groups, we use a rules-based system, and it's a crucial and mandatory prerequisite to learn to trade properly, to become, in inverted commas, a consistently successful trader, which is the definition that Mark Douglas used. And where do we get this word properly from? Well, it comes from Mark Douglas. You won't find it in any of these books, but you will if you've listened to his Path to Consistency workshop tapes or recordings, and there are some out on the internet. It's now got out there. But I do have a copy, and I did actually attend one of his Path to Consistency workshops in 2004, and it comes from his workbook. And this is what it says. It says analysis and trading are not the same things. So this backs up, what I said earlier about, you trying to solve your problems through analysis. No matter what your analysis says, the only way you can transform that analysis into profits is if you can execute your trades properly. Trading is a function of proper execution. Well, what is proper execution? Well, I defined that to you earlier. And that is where we get people to. Now, just because you're a great analyst, fundamental, technical, combination, one or the other, it doesn't mean you're a great trader, because trading requires you to execute, to buy and sell, and to do it objectively and consistently, and to do it in a way that you trust, in a way that you are confident, in the way that you don't feel discomfort all the time, the way that it's pleasant and you enjoy doing it. If you are battling yourself all the time and there's this conflict going on all the time inside of you as to whether you should place a trade or not, or take an exit or not, or when the trade's going and you haven't got an exit signal that you should lock in the profit by just willy-nilly deciding on the fly that you should get out of it, that's not proper execution. Or if you get an entry and you feel the stock hasn't yet, the uptrend isn't quite yet there or strong enough according to you knowing better, and you're now not using your objective decision support system and you override it, that's not trading properly. If your trade goes straight down into loss and it hits your stop loss, hits your trading stop loss, and you decide, no, this has got, because I read an article or I heard something that this trade has got potential, I'm not going to take my exit signal, that's not trading properly. And of course, every big loss starts out as a small loss. And I'm sure all of you who listen to this webinar would have had some large loss trades. So attaining excellence and mastery, trading properly. You've got to step into a process, Mark Douglas's words, to change your skills and habits. Because if you're not getting the outcomes at the moment, you can blame all the things that you want, but at the end of the day, it's because you've got dysfunctional skills and dysfunctional habits with respect to what you're trying to achieve in the environment that you're trying to achieve it. And now I'll bring in James Clear, because James Clear, and I should mention this because we use as manuals, if you like, we unpack in detail big chunks of the books of Trading in the Zone by Mark Douglas and James Clear's book, Atomic Habits. Now, Atomic Habits is not a trading book, but it's a habit and skills book, and how you can change your habits in any part of your life. And of course, that's what you have to do to achieve trading excellence or mastery, and to be able to trade properly. And of course, where everybody tries to do to get better, that do not get better, that fail to get better, is they keep on being outcome biased, outcome focused, and they are not process focused. So what James Clear is saying is, you do not start at outcomes. You start in the middle over here with your current skills and habits, because they define how you execute. And then you put the process in place to be able to learn the skills and the habits, and the outcomes are the result of you looking at who you are as a trader, and looking at whether the skills and the habits you have are functional or not with respect to what you're doing. And that's where you go to, that's where you change. And that is what we provide you with. We provide you with attaining those skills, attaining the habits, the processes get put in place, the outcomes come after that. So skills first, outcomes follow. So I'll just put to you that if you're not using a rules-based system, then you're using trial and error, on the fly, subjective analysis of some kind. And you'll never be able to become consistent if you're using that kind of analysis. And you also have to know your current analysis edge. And that should be back tested and live traded, as I said. And you also, I'm more asking you the question, what skills acquisition are you doing right now? And how are you going about that? Are you doing as a trial and error on the fly? Or have you got a specific defined skills acquisition process that you're going through in the same way as a golfer would go to the driving range, or a cricketer would go to the nets, or businesses would get together and do professional development? What is your process? I put to you that it's nothing. Very few people work on their skills because they don't know how to, and they haven't got a plan to do it. If you believe there's a better way than what I've put to you today, right, then effectively what you're saying is that you know more than Mark Douglas and James Clear, which you don't, quite frankly. I'll be blunt, okay? So we are using material that not only did it work for them and has worked for them in their various fields, it's worked for us. And we've put hundreds of people through this just in the last 9 months or so, and it is working. The feedback that we're getting is brilliant. Even existing customers that we've had for years, and I'll show you a testimonial at the moment, who struggled with this. Eventually, we've got the training together, and it's the lived experience training, which we've never done to the level of which we're doing it at the moment, that is transforming traders' lives. And if you believe there's a better way, and you think it's obviously not, more, you'll agree that you don't know more than Mark Douglas and James Clear, then look to yourself. It's your ego and your current beliefs, your current habits, which and you can look at your outcomes, which are dysfunctional with respect to what you're trying to achieve. And it's your very ego, it's your very you. It's how you do things at the moment and how you believe you should do things, because you don't yet know what you don't know. You may know what to do, but you haven't yet translated that into doing what you know. Look to your ego, because it's trying to protect itself. Your beliefs, your current beliefs, dysfunctional with what you're trying to achieve, are protecting them. They're defending themselves, and they're trying to prove something. They are what are holding you back. And this is what you have to do. You have to step into a process to change this. Otherwise, more than Mark Douglas and James Clear. So I'll quickly talk about some results, and then I'll get into the offer, and you can then assess this for yourself and take the actions that I'll put to you at the end. And I'll also still talk to you about our new trading system that's coming. So very quickly, this is since the 5th of August to current. This is the performance of the blue line is our what I call a public portfolio on the ASX. We've got an ASX and a USA public portfolio using SPA3 Investor. We've got nearly 9.5 years of live trading. So we did research before that, and we've got now 9.5 years of live trading, lived experience, executing with the skills, the trading excellence skills that we talk about here. Whose are they? They're mine. So I'm trading this portfolio with my own money. It's not company money, it's my own money. And this is what the result, the blue line is the equity curve. That's the daily plotted portfolio value. The red line is the ASX 200 accumulation index. The black line is the ASX 200 index. So that's excluding dividends. The red line includes dividends. 26.5% return over the last 9.5 months, whereas the accumulation index has done 15.39, and I think this is sitting at 11.6% is the ASX 200. So why did I put the ASX 200 there? Because it defines the environment. It defines the ups and downs, the volatility of the environment. So we look at that for what kind of environment have we had to execute in an environment. Has it been uncertain? Sure. This is when Trump's Liberation Day was announced. Big fall, and this is where I think DeepSeek was announced. And the American markets, all the tech stocks fell in a heap because there was only $6 million to build an AI system, which we found out it wasn't. And of course, Liberation Day was going to be the end of the world. I had I can think of one customer being trading with us for nearly 20 years. Said I'm on the sidelines. Highly, in my view, skilled, but still not to the level of trading excellence because this person decided that they were going to sit on the sidelines. So they wore the drawdown. And so now I know that this person doesn't have the skills yet because they couldn't, they might be politically involved in all sorts of things, and they are therefore saying that this is what's going to happen in the future. but they've missed out on this entire run-up that's happened because they knew what was going to happen. Nobody knows what's going to happen. That is why you've got to surrender to an objective process, a decision support system that has got an edge in the environment. So right now, that person who did that doesn't have an edge in the environment because they deferred to their own personal, subjectivity, and they've lost out on their portfolio hitting a new all-time high. And this is the long-term results. So this portfolio, it's real money portfolio, followed the system 100% at all times, and it's got 200% return over 9.45 years, compared to the ASX 200 134% return, compared to the ASX 200 64% return. So you can see that over 9.5 years, the accumulation index has got double the ASX 200 index. That's without dividends. That's the effect of dividends in Australia. Over 10 years, it basically doubles performance, and that's about half of the performance in Australian indices come from dividends. And this has obviously got less than half the dividends, less than half the performance of this comes from dividends. It comes from buying and selling. And so this is where most managed funds are. Most managed funds, we find out from the SPA scorecard and SPA persistence report, is that about 85% of managed funds, super funds, etc., underperform balanced funds, target date funds, underperform the ASX 200 accumulation index over periods of 15 years. In America, 93% of all of those funds underperform the S&P 500 total return index over periods of 15 years. But this is where most traders are. So most traders underperform the ASX 200, let alone 200 accumulation index. How do you know this? Because the regulators in overseas and in Europe require trading houses, brokers to report quarterly on how their customers are doing. And in any given quarter, depending what the market's done, between 70 and 95% of traders lose money, regardless of what the market's doing, even in rising markets, right? So we know that people, the odds are that if you are trading or if you're an active investor, is that you are going to lose money, let alone profit, to the extent that you are going to beat the total return index. You can only get to this level of trading excellence through the pathway that I've described, through the pathway that Mark Douglas describes. And that's what we do. We take you on that pathway. So the opportunity cost, people are doing this with tens of thousands of dollars and underperforming with tens and even hundreds of thousands of dollars. I know this because I've spoken to these people over the last 30 years of having this business. And so the opportunity cost of paying a little bit of money to somebody like ourselves to actually step into a process to get these skills is minute compared to the opportunity cost of losing. And you'll know if you're listening to this webinar, the thousands, tens of thousands, maybe even hundreds of thousands of dollars that you've lost through not having the correct skills, through sticking to stocks that have fallen in a heap, the Blue Scopes, the Magellans, the Babcock and Browns, all of these stocks, right? Some have gone under and some have had 90% retracements, but people are so involved and invested in believing that this was the perfect stock that they put more and more money in and lost literally tens, hundreds of thousands of dollars. And so the opportunity cost of getting the skills to never do that again is minute if you get trained up. Do the training, pay the money to do the training, pay the money to get objective and to gain these skills. And then you can go and do with these skills whatever you want to do with other systems, other processes, even as Mark Douglas talks about in his book, to get to the intuitive level. The first stage is the mechanical stage. You'll never get to the intuitive stage. You'll never get to the subjective stage until you've gone through the mechanical stage. So that 3%, so I'll just point, where does that 3% come from? 12.4% compounded versus 9.4% compounded, and it goes up and down a little bit each day, is that 3% annualized means 50% more profit. So we started this portfolio at $80,000. We're now sitting on $161,000 profit. So we've trebled the $80,000, and that's 200% profit compared to $107,000 profit in the accumulation index. That's $53,000 more profit by SPA3 Investor. So that's additional profit, assuming you were able to get the ASX 200 accumulation index returns, which you won't unless you had 100% of your money sitting in STW, which is the index ETF with ASX 200, and reinvested all the profits, less the fees would be slightly less than that. And so even the passive, that's what we're doing. We're aiming to beat the passive, but we know those who get active do worse than the ASX 200 accumulation index and maybe even lose money. So that's 201% return versus 134% return, trebled versus 2.35 times in the XJO. And I have to point out, because the regulators told us to do this, is that portfolio I've just shown you includes dividends, includes costs, includes everything, except it doesn't include the Sharewealth Systems fees that you would pay to us, which is $99 a month or $1,045 per annum. Now that hasn't been those weren't the fees over the last 9 years, but that's what the fees are now. But that also excludes franking credits. Now that level of portfolio value, the franking credits that you would be able to put into the portfolio would more than cover Sharewealth Systems fees, which are fixed. So we make up for those fees. Now, obviously, if you're trading with $5,000 or $10,000, then the franking credits won't make up for the fees. But the idea is that this system is being used by customers who are investing hundreds of thousands, and I know of a few who are investing over $1 million and even over $3 million using the system to manage their super funds. Why? Because they've achieved trading excellence. And that we do the American market as well. So this is the American equity curve. In the US markets, also over 9.5 years. These figures are a bit small over here, but and of course it doesn't go up in a straight line. There are wins and losses and drawdowns along the way, but it's achieved 11.71% annualized over the 9.45 years. Started with $70,000 starting US dollars starting capital, and there's now $130,000 total profit in US dollars sitting in that as well. And you can, when you do the training, you can choose to do it in either the US market or the Australian market, or both if you want to. So it's 185% total return. So what do you get to help you achieve and attain trading excellence? Well, first of all, you get the SPA3 Investor rules-based trading system if you had to become a customer of ours, which would dearly love you to become. And what this does is it overcomes erratic and inconsistent decision-making by overcoming subjective outside influences from your own personal feelings, which is an internal influence that's not conducive to successful trading. So that is your current dysfunctional skills, your current dysfunctional beliefs with respect to the market and yourself, your current dysfunctional habits that you have that get you to make, that's basically the personal feelings that cause you to make mistakes and trading errors. And also external opinions and commentary and subjective analyses, looking at different charts, hearing different things, getting different notions, wars, politicians, all geopolitical things, the economy, the government, and taking in all these external input, and then you overriding and becoming subjective. So we've got to overcome that, right? And also geopolitical events. You also get beyond charts, technical analysis software. You get 20 years worth of data, and we also update the data. So we provide the data feeds as well. And beyond charts is what the SPA3 Investor rules-based mechanical trading system is programmed into, so you can actually get the signals. Beyond charts also has a tightly integrated portfolio manager in it, and you can manage multiple portfolios. So effectively, you become with SPA3 Investor a fund manager, your own fund manager that outperforms the funds. You also get a smartphone app, the Sharewealth Systems Alerts and Portfolio Management app. I'll show you a screenshot of that at the moment. And effectively, the alerts are the outcome of running a scan, if you like. So if you ran a scan in Beyond Charts for SPA3 Investor signals, those get pushed out to your app, and you get a notification every day on whether there are any signals or not. In Australia, over the last 5 days, we've had no buys or sells, but in America we have. And you can also, the app's also synced with the portfolio manager in Beyond Charts, so you can update on either side, and it syncs with the trades that you've done. You also get support. You get unlimited inbound telephone support, unlimited email support via the help desk, and you also get accountability management to get you through the training. And what is the training? There's foundational training, which is delivered before each live trading study group starts. So the study groups start every 2 months. The last one started 2.5 weeks ago, and the next one will be starting in the first month, on the first Monday of August. And but the foundational training can take anything from 4 days to 4 weeks to do, depending on how much time and effort you put into it. But our accountability management processes will ensure you get through it. And that's where we teach you the knowledge about why you need to have habits. So we use James Clear material from Atomic Habits, but we also use the 5, so you learn about the principles and the truths that come out of the fundamental trading truths that come out of Mark Douglas's work, and why. So we teach you the why you have to do this, and basically start you on that journey that I showed you in the first 2 slides. And then you get, then you'll enroll and you'll get into a live trading, learn to trade properly study group. And we've got a few of those going on at the moment. The earliest one started last year, and it's still going for those that are still if you like, acquiring the skills and haven't felt they've got there yet. And then you also have a closed forum and coaching. So each study group has its own forum where everybody is each other's coach and accountability buddy, and that's the lived experience that you live through. That's an example of the app. And if you want to do a session with me to go through the actual software, I'll give you a website to go to where you can book a call with me, but I'll take you through the app and show you what it does as well. So some feedback. Here's one from Michael L. in April, who is a long way through the Learn to Trade, one of the study groups, the Learn to Trade Properly study groups. And he says, focusing on the process and being, he says, so David, I began to get it. Viewing each trade through the lens of probabilities, focusing on the process and being detached from the trade result was the game changer for me. I've already recommended the ShareWell system trading system to many of my share trading friends. Mr. Mark Douglas was certainly a man ahead of his time with amazing insights into share trading psychology. Another one from Tito. After being a member of ShareWell Systems for many years, I finally came to the realization that following this system definitely yields much better results than my own trading system or any other program I know of. The Learn to Trade Properly program and study group crystallize and integrate the teachings of Mark Douglas, Trading in the Zone, and James Clear, Atomic Habits. I highly recommend ShareWell Systems to anyone who wants to trade the stock markets profitably and become the best trader they can be. That's really what we kind of promise we'll do. We'll make you the best trader you can be. Right, I just wanted, one of the other things I said is that I would show you, without getting into the software for just for time considerations, I'd show you the settings, if you like, the background behind the main indicator we use. Now, I could have chosen any chart. I've chosen Amazon here, just it's a US chart. I could have chosen any of the Australian stocks as well. But these are the signals that appear on your chart. And these are also the signals that are pushed to your smartphone app as well. So I just wanted to talk a bit about what an edge is. So what is objective? So objective is, the buy signal occurs on a day and you enter the next day. An exit signal occurs at the end of the day. So this is all daily data, and you exit the next day. So this is, this is swing trading or position trading. This is not intraday trading. This is holding positions over multiple days. How many days? Well, you can see for Amazon, the average hold period is 76 days. Now that's quite short compared to some of the other stocks. So many stocks have 110, 140 days as average hold periods. That's average for profit and loss trades. There's total trades done over the period of Amazon, 83. Win rate is 54.72. The profit ratio is 4.5. What is the profit ratio? The profit ratio is telling you 4.5 is that the average winner of 31% is 4.5 times bigger than the average loser of 6.96%. So that's what your profit ratio is. And then you get this really, really important calculation called expectancy. I'm not going to go through all these others. You can watch the recording and look at them in your own time, or you can book a call with me and I can take you through to more detail. But the combination of win rate and payoff ratio is expectancy. And that says you got an edge. So what is expectancy? Expectancy is math, which is a Van Tharp term in his book, Trade Your Way to Financial Freedom. But really, it's just another term for what's been around for decades, mathematical expectation. And that's what it's all about, probability. And that equals the word edge. So where Mark Douglas uses the word edge, that's what he's talking about. So what is the formula? It's profit ratio plus 1 times win rate minus 1. So remember the profit ratio, 4.5, average winner 4.5 times bigger than average loser. You add 1 to it, you multiply by the win rate, 54%, and you subtract 1, and you end up with 1.94, which is, 1.98. My apologies, 1.98. Now, what does 1.94, 1.98 mean? It means that, let's look at a break-even edge. So if you are spinning a coin, a 50% win rate, and every time you won $1, and every time you lost $1, that means the profit ratio is 1. So it's one, average winner is $1, average loser is $1. So the profit ratio is 1 to 1. You add 1, multiply by 0.5, so that's 1 plus 1 equals 2, multiply by 0.5 equals 1, subtract 1 equals 0. That's a break-even edge. So if you could spin a coin where you somehow won 55% of the time, then you would have an edge in your favor. Or if you still won 50% of the time, but you found a banker, somebody who's tossing the coin to pay you $1.50 every time you won, then the profit ratio would be 1.5. So then you would have an edge that would be greater than 0. So the greater that edge, the better it is. So all of the stocks that are in our universe have edges. And what we do is we combine them into a portfolio like a fund manager. So we get our money in the market. So we allocate our money and we get our money into the market, and that then generates an equity curve that I showed you earlier. Okay, so I also said to you, I talk a bit about the settings behind the stock. So I've just got a stock here. It's Meta. It's not part of our universe at the moment. And there are buy and sell signals on Meta. Now, what we do is most of you who've done technical analysis would be familiar with the average true range trailing stop. It's a standard indicator. Wells Wilder, you'll see his book on my shelf, devised it in the 1970s, and it's a volatility-based indicator that self-adapts. But the standard indicator only allows you to have one upsetting, one long multiplier, and one short multiplier. What we've done with SPA3 Investor, and it's a concept that I devised some 2009, and have researched it and used it, and it's now become really the 70 to 80 to 90% of my trading decisions. The rest of SPA3 Investor is also patterns. So we look at pretty standard patterns, and they get built into the system as well, heads and shoulders and other patterns. And so what we do now is, rather than having one long multiplier and one short multiplier, is we go down here to the volatility. So this is average true range volatility exponentially smoothed, which is just a volatility indicator, average true range. And we use 21 days as the look back period, so a month of data. And you can see here how the volatility of Meta, of Facebook, has changed over the time. So what this volatility tells you is that the characteristics of the price action varies over the life of the data set. Now, every single stock has a unique set of characteristics defined by volatility and by trendability. So you can see that this is a downtrend. So we're out of it over there, sell signal, buy signal. And this is just by putting some settings in here. And what we do is we have a multiplier, a long multiplier, and a short multiplier per level of volatility. So you define the volatility, the ATR VE, that's just down here. So that red line is sitting, I think, at 3.5% volatility. And up here, you're getting up to 10, 11% volatility. And down here, you're getting down to 1.5% volatility. So it varies quite a wide range. So for that range of volatility, we define the ranges. So that's between 2.25% and 3% volatility. We have a long multiplier and a short multiplier. And then we define also between a volatility of 3 and 4%, we have a different up and down multiplier. Now, this is not a live chart, but we can have anywhere between 7 and 10 levels depending on the characteristics of the stock and how volatile the price action is, and we'd have a different multiplier. How do you come up with those multipliers? Well, we do some crude optimization that we run through our systems to do it. And of course, you could do it manually. But so we've taken the ATR trading stop to another level. And that is really, the secret herbs and spices behind SPA3 Investor's main indicator. And it works brilliantly. So this is a concept. This is a trading concept that works. And what you find with, and you can see that from the edge, you can see that from the trading results, and we've made it objective. So we put on buy and sell signals along the way. So Meta, using these particular parameters, would be an open trade at the moment, and we would hold it like there was an entry over there right against the run of play, and that was a massive profit trade over there in Meta. Down here, everybody would have said, overruled, penny skies going to fall on my head, et cetera, and talk themselves out of the trade. That's not objective trading. That is not trading mastery. That's not consistency. So how do we use this? Well, it's this, how you can see the stats. So with this set of settings, and the set of settings there were quite crude. Win rate 58%, profit ratio 6.9, 17 trades, average hold period 184 days, and that would be quite a long-term system using that parameter. So the concept is solid, and that is what we use. That's the settings behind our SPA3 Investor. Right. So let's get into the end of financial year special pretty quickly. So the investment to acquire these skills is $1,950. It's a once-off, and you're buying the intellectual property as a license fee for the system, for everything else, the software, everything is bundled into one price, including the training, which is the Learn to Trade Properly training that you go through. And just to make you aware, and what you've seen from the emails, is the price is rising to $2,495 in the near future. So by locking in now, you're getting the price at $1,950. There's also a monthly fee of $99 or $1,045 monthly. And if you wanted to get the US or vice versa, you could get the US and pay the $99 or $1,045, and you could have, and then at some stage add the ASX. So the secondary market, whether it's US or ASX, would be $44 or $440 a year, $44 a month or $444 a year. Now, as part of this end of financial year special, you also are going to get the first 3 months of $99 for free. So effectively, you won't pay at the end of June, you won't pay at the end of July, you won't pay at the end of August. You'll pay for the first time at the end of September. So that's a saving of $297. And we've also extended what's normally the 90-day money-back guarantee to a 6-month money-back guarantee. So what we do is the money-back guarantee starts when the live trading, the lived experience starts. So the next one starts in October. So you'll have 6 months from October to get a money-back guarantee. The only proviso on that is that you actually do the Learn to Trade Properly training. That's the only proviso on the money-back guarantee. If you come to us and say, I want my money back, but you've done none of the training, well, then what you're signing up for is to get trained and to use the objective SPA3 Investor rules-based system to acquire skills. And if you don't give us the chance to help you acquire these skills, to be your instructor, your coach, and your mentor, well, then sorry, we're not going to give you your money back. You make that decision now, and you make the commitment. You put in the discipline. We help you. We'll be your accountability buddy, and then at the end of 6 months, when you've gone through the Learn to Trade Properly study group, and you feel you haven't learned enough, which we haven't had anybody say that yet. Everybody has been just brilliant feedback. Then we'll give you your money back, but you need to do the training. So you're making a commitment here to do this. And we'll also throw in a bonus for the end of financial year special, where you'll get 40 minutes one-on-one onboarding call. Onboarding is mostly automated, but we'll give you, just to get you going, point you in the right direction, maybe have a look at your current portfolio. And we can't give direct and personal advice, but we can give indications on what you might do using SPA3 Investor and how you transform. So your total saving would be $1,500 if you become a customer before the 30th of June. So you got to, what's the proviso is that you purchase by close of business on the 30th of June. And or you can go to learntotradeproperly.com right now, and you can buy you can pay the $1,950 there, and you'll be locked in to getting the specials that we've offered here. So that's an online store, learntotradeproperly.com. Or you can, on the same web page, if you want to know more, you want to be taken through the system, to see it live and to whatever, you can book a one-on-one call where I'll demonstrate the software and talk about all of the concepts that we have in that I've discussed today, and the whole journey of getting to trading excellence trading mastery. And once you get there, as I said, the very first slide, you've got it. You've got it for good. You're sure you have to keep fine-tuning your skills, sticking with the process, but you've now got the mental skills. And the fantastic thing about trading is that it's mental skills that you're retaining. You don't have to be physically great at doing anything. It's just the mental skills. So if you have any questions, I'm happy to take them now. Or if you want to, like most people do, is they book a time with me, and I'll make the time available to go through until the 30th of June to book that one-on-one call to demonstrate or discuss anything that we've had today. So I thank you for your attendance. I can see just about everybody stayed on right till the end, which is good. We will be sending out a recording of this, so you'll be able to pick the recording apart. And otherwise, go to learntotradeproperly.com now. Claim the end of financial year special offer, or book a time with me. I'll finish there. And as I finish off all my webinars to our customers, what I say is I wish you consistent and objective and peaceful, active investing and trading.